All right, we're back on YouTube, guys. What a crazy few weeks it's been in the stock markets. We have been predicting these markets fantastically. If you watched my last video, I have nailed the absolute low on the markets. Fantastic reading of the markets. We went long. We got a nice 20-25% bounce on a lot of those Mag 7 stocks. And we also hedged our portfolio for further downside. So we have been fantastically navigating these markets. Okay, so now you want to know what my opinion is going forward. Do I think the low is in? We're going to be looking at the charts right now, so I don't want to waste too much of your time. Let's get straight into the charts. All right, guys, sorry, I don't know what happened here. Okay, so this is the SPX. If you watched my last video, this is the level, this exact level I marked here as the level I thought would get us a low in the market. Okay, and that's exactly what happened. We've got an absolute monster bounce from this level, right? We got 13% bounce. We had that big day in the markets, 8% pump when Trump announced those tariff pauses. Okay, so we are really nicely in a very great position here. Okay, very good position. And the reason I marked this level was the 0.5, also this value area high. Okay, also lined up with the anchored VWAP from here. So we had a lot of confluence to go along here. That's exactly what we did. We are up handsomely on those positions. All right, so yeah, we're in a great position because we also hedged that portfolio. We hedged ourselves on Tuesday, okay, of last week. We were right here and we're down now since then about 6% on those puts. So I hedged my portfolio. If you look at this, I sent out the alert. Okay, if you want access to any of these alerts, any of the trades, we're day traders as well. We're swing traders, day traders, long-term portfolios. If you want access, link is in the description. So on the 15th, I said, guys, look, I caught a very good entry on Mag 7. We're up 20-25 on these from the entry points. I'm still waiting to exercise some caution and conservatism here. I will therefore look to hedge my portfolio with put options expiring in 3 months. This is a hedge position. The purpose is not to make money, but rather to keep protected. Our jobs as traders and investors is managing risk. So that's what I am doing here. Okay, so that's exactly what our job to do is. All right, this is the type of position you want to be in. All right, you want to be long 25 to 30% pumps to the upside on those Mag 7 stocks. I'm not going to go over them individually, but you can see they move 20-25% higher aggressively from the lows. So we're up on those. That's the type of position you want to be in. You want to be in a position where you can start hedging those positions, because at the end of the day, we don't know if this is going to go back to all-time highs or it's going to crack the lows. All right. So our jobs as traders, as you know, I consider ourselves to be risk managers. Okay, our job is to manage risk. So that's what I did, and yeah, that's playing out pretty nicely. We are very balanced, very hedged. So if we go down, my puts will, they'll be up quite heavily. So that's like insurance for my stocks. Well, I'm not going to sell the stocks. I will just take profits on those put options, and I'll be buyer of more stocks. Okay, I'll be a buyer if we come lower. So that's my plan. What do I think is going to happen on the S&P 500 here? I think we have a chance of coming a little bit lower, if I'm honest, right? I think we do have a chance of coming a little bit lower, and the reason for that is simply, one of the main reasons is this weekly 200 moving average. All right, you can see this, how many times the market has come back and touched this level, right? How many times has it come and touched this level? Like 1, 2, 3, 4, 5. Even in the last bear market, we touched it. So I can see a world where we can come down, tag it. I still believe my date for a low on the stock market is around June. Okay, so I believe the stock market will put in either way, if we come lower or not. I think a likely bottom for the stock market to get a new all-time highs is June. I don't know if we're going to go back to all-time highs, but that will be my projection at that point. I think we're going to put in a very, very solid bottom around June, and then we can start working our way towards new all-time highs. If you go back to my video in November, I said, there's going to be a political battle between Trump and Jay Powell, and that is unfolding right in front of your eyes right now. Okay, Trump is not happy with Jay Powell. Jay Powell is not cutting rates. Trump wants rate cuts, and Jay Powell is not providing him with the rate cuts. All right, and I do think Jay Powell is playing a little bit of a political game, if I'm honest. They really should be cutting rates. There's no reason for them to not cut rates. We've got 20% crash on the stock market. We've got consumer confidence so low. Once consumer confidence is low, guys, they're not going to spend money in the economy. Once consumers stop spending money in the economy, that is going to slow down growth. Okay, that's going to slow down growth. That's why we have the Atlanta Fed projecting a negative quarter GDP. So really, to be honest, he's saying we're not seeing it in the hard data, but once you see it in the hard data, the damage is already done by then. Okay, the damage is done in all markets, right? We're probably at the end of the recession. Once you start getting the figures in the hard data, so you want to be proactive. But we know from historical readings that the Fed are not proactive. They are a reactionary function, and Trump is not happy with Powell. But Powell is playing politics. He's not going to give Trump. He's not going to cave in. He said that already. And I don't expect him to cut rates in May, okay? Especially now with Trump calling him out and things like that. I don't expect rate cuts in May. But in June, I think with especially if the stock market continues to fall, June will be your likely first rate cut and the end to quantitative tightening. Which to me is the most important thing, is to end Q3 and print more money. Okay, so they're going to print more money, and you'll see a new all-time highs in the stock market if they start printing more money. And they have to print money because they have to service the debt. Okay, it's as simple as that. Some people will say to me, "Oh, you're just kicking the can down the road." Yes, but that's the game that the US has created. Okay, we are just the players. They made the game. We are just playing it. Simple as that. We don't control the rules. They do. So they will continue to print money because they have to. There's no other way of servicing the debts. The tariffs is not going to service those massive fiscal deficits that they are running. So they have to get the Federal Reserve to print more money. Simple as that. That's why you're seeing a move in Bitcoin, gold, and considered safe havens. The 10-year is also rallying. Obviously, a lot of politics being played in the 10-year yield right now is spiking up. So I can expect a Fed put pretty soon, maybe even before the June meeting. Maybe before the June meeting, they pause QT, okay, and they turn on the money printer. And that's, to be honest with you, that's the thing that matters the most, is the money printer. If the money printer comes on, this market's going to all-time highs. I have no doubts about that. Obviously, if Fed keeps playing politics and delays, then we can get further move to the downside. It's a very politically driven market at the moment. We're watching very, very closely. But, as a technical analyst, we want to be buying key levels. Okay, that's our job. Buy key levels, protect ourselves, hedge ourselves, and make money from these markets, guys. All right. I day trade the S&P 500 ES futures and NASDAQ futures each and every day. So if you want to learn how to day trading is a lot different to the analysis that I'm showing you right now. We're using order flow, volume, TPO, and things like that. Okay, for day trading, it's completely different ball game. I trade these markets every single day, so I am, very much engaged in what's going on on the political front as well, because that is affecting markets quite a lot these days every little tweet, you're getting crazy moves in the markets. All right. But I do think we have this week we have a chance of moving higher. We've taken out the liquidity under this low on the stock market. I do believe we've got a chance of going back towards these highs, this 200 moving average, and then maybe get maybe something like this, and then move back down, and that would line up with my hypothesis of a June low, and then I expect this market to price in a recession. I think to have a look at this from a 3-month period. Okay, this one just started. We've got May and June. All right, so we've got May and June for this one. So what is a recession? A recession is 2 quarters of negative GDP. Maybe the stock markets will front run the recession. All right. And then you get people calling for a recession, or we're in a recession, blah blah blah. The stock market will bottom before the recession is called. So maybe that's what's happening right now. We're getting that out of the way. 2 negative quarters. Okay, our price action is quite sufficient to price in a recession, right? So pricing in all the uncertainty, and then the markets will look forward, and they will know that the Fed will print money and cut rates, and I think that will be the start of a new bull phase. All right, a start of a new bull phase. If the recession doesn't happen now, and we get we turn around, we make new all-time highs, then you probably get another high and another drop. All right, so I think it'll be better if the market will just get the recession out of the way right now. Okay, get it out of the way and we can move on. All right, let's have a look at Bitcoin. Pretty simple, well, not simple, sorry. Bitcoin has been performing really well. Bitcoin and gold, surprisingly, obviously gold has outperformed every asset. But Bitcoin, considering the stock market performance, has done really, really well. Okay, really well, which is surprising to me as well. Not going to lie about that. But yeah, we've broken this downtrend. Next major resistance for me, I'm keeping it pretty simple, is around $93,000. I do expect a rejection here, and then we'll see the next directional move. If Bitcoin can then reclaim, I think we're going to make a new all-time highs. Okay, if not, and then we break down, I mean, this is the lower high, back test, maybe go all the way down. This is also a possible scenario. It's looking less likely. It's likely we come test some rejection, move down, move back up, especially if we get a bottom in around June time in the stock market. That's going to add more fuel to Bitcoin, and we could see new all-time highs on Bitcoin July, August. All right, maybe even sooner, I don't know. But I'm watching carefully the stock market right now. I'm watching very, very carefully the stock market. So my base case is a little bit further downside. Maybe we get a pop into at least maybe this gap fill here. All right, maybe this gap fill here, and then I move down in June and a June bottom around the $4,500 region. Okay, $4,600. $4,600 region. That will line up with the dip in volume here. Okay, around 46.5. So around these levels, I'll be buying more stocks again. I think you get a really nice discount on some other names as well that you'd want in your portfolio. Okay, so you will get a lot of opportunities. That's my base case. One more push, and then I move down. Maybe we don't even get that push up. Okay, and we just come down, make a new low. In any case, we're prepared. We're prepared for both scenarios. All right. Anyways, I don't want to drag this video on for too long, guys. Okay, I hope I provided some value. If you like the content, hit that like, hit that subscribe, and I will see you in future videos. Thank you for watching. Peace.